Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's U.S. Large Cap Granny Shots ETF. This is our weekly update for the week of August 5th. First, I want to start with some particulars. The price as of August 4th's close was $23.46, net asset value of $23.46, and total assets of $2.128 billion. Over the past week, Granny Shots fell 0.8%. The S&P fell 0.92%, meaning Granny Shots outperformed by 10 basis points. Year to date, Granny Shots is up 17.53%. The S&P 500 total return is up 8.4%, meaning Granny Shots is outperforming by 910 basis points. I wanted to start this video by talking about our eyes and what we're watching for in the month of August. There's four things. First, the first week of August is really the winding down of second quarter earnings season. August 12th is Core CPI, and at the end of August is the Fed Chair's speech at Jackson Hole. But I want to start with August seasonals. If we zoom in on August seasonals and compare it to the first year of a presidency, you can see that August tends to be a month where there's some chop. So maybe you make highs early in the month and then you dip into the month. So that's going to worry investors. But I think we front-loaded some of this already because we had something called bearish engulfing days. Last week on Monday, the market opened up and then closed down. Okay, that's a bearish engulfing day. That happened on Tuesday, Wednesday, Thursday, and Friday of the week. So you had 5 consecutive bearish engulfing days. Now that's been common since the April lows. As you can see, we've had a series of bearish engulfing days, but the longest was actually after the April lows, where you had 5 bearish engulfing days. But that was it, because then markets began to rally. And I think that's what happened on August 4th. You can see the market opened higher and then closed on a high, meaning stocks actually reversed those bearish engulfing days. In fact, if you look at it on sort of a 1-minute intraday, you can see we opened up higher on August 4th and continued to be strong throughout the day. That's good news. Now, earnings season's been good. This is the last really big week, 124 companies reporting. There's a lot here. Do you see those in red? Those are the Granny Shots reporting. In the light blue are the SMID Granny Shots, which are not part of this ETF, but they're a similar portfolio of names. And of the 69% of the companies that have reported so far, 83% are beating. That's a big number. And the surprise ratio is 6.5%. So it's been a good earnings season. And there's some Fed speak this week as well. Now, I think markets are going to care about July, August core CPI, especially because this is where the Fed expects inflation to show up. But that's not for 8 days. And then August 21 to 23 is Jackson Hole, and the Fed chair will speak. And we know the focus is on Fed independence. But the market, after that jobs report last week, went from expecting 1.2 cuts to now 2.5 cuts. And as you can see, they took cuts out this year, but they've added them to next year. But I think one of the things just keep in back your mind is this is still one of the most hated V-shaped rallies. So do I think August is a down month? I mean, everyone's expecting it to be, so I'm probably going to say no. Now let's look at the Granny stock performance. Of the top 5 performers, it was Cadence, Meta, S&P Global, Microsoft, and Abbott Labs. I mean, this is basically just good earnings. I'm just going to walk through them. Cadence had a great quarter. Meta did great. Microsoft did great. S&P Global had a great quarter. Okay, the bottom 5 names: Palo Alto, PayPal, FICO, Amazon, Tesla. FICO seems to kind of be there a lot. Palo Alto had some issues. PayPal sank on good earnings. Amazon fell after earnings. And, FICO continues to struggle. And ultimately, I think earnings is just a waypoint. So I wouldn't put too much credence if a stock falls on poor earnings because that's sometimes an overreaction. In terms of themes, easing financial conditions did the best. Is that a surprise? Maybe not, because at the end of the day, this is telling us the Fed, especially after that jobs report, might be behind the curve. And that's why we think stocks tied to easing financial conditions might be doing better. And then global labor suppliers, led by names like Cadence. That's it for now. Thanks for listening, and I'll speak to you soon.